As inflation rages out of control, the Biden White House is in crisis. The Consumer Price Index reveals, surprise, surprise, inflation is not transitory. And the Federal Reserve finally announces tapering, but will it be enough? Alright. If you've been alive in the last few months, you might be aware that inflation is surging out of control. Prices are rising across the board with no stop in sight, and average Americans are frustrated and seeking relief after inflation eroded their purchasing power and lowered their standard of living. Now, you and I are aware that inflation has always been a monetary phenomenon. This is what legendary economist Milton Friedman has taught us. Yet the Federal Reserve remains an enigma to most Americans. Most of us haven't even heard of the name Jerome Powell or can recognize his picture. And those of us who could will say, yeah, that's the guy from the memes, right? And therefore, the inflation crisis is morphing into a political one, striking the Biden White House with extreme power as most Americans seek someone to blame for this crisis. And who's more available and suitable than President Joe Biden? The president's approval numbers are dropping like a rock, and in all likelihood, they will continue to drop as the inflation crisis is expected to last with us well into next year, if not beyond. Of course, in this program, I've been saying that Jerome Powell is Joe Biden's worst enemy, yet he doesn't even realize it because Joe will eat the blame, not Jerome. Don't get me wrong, the Biden policies of spending on steroids, crushing the energy infrastructure, and endless stimulus is also contributing to inflation, but these policies won't be possible without the Fed printing money out of thin air. Trillions and trillions of dollars in a reckless, irresponsible fashion. They have assumed for years that injecting the market and the economy with dope to prop up equities and real estate markets to benefit the rich will come with no consequences because inflation hasn't been rising for years. Now they're proven wrong, and the ramifications will be severe, impacting the poor and the middle class the most, and causing an economic and political crisis. The Republican media is seizing this opportunity of striking a wounded animal in Joe Biden, and they are landing.
You, the American people, have every reason to be angry at Joe Biden. He is failing this country around every turn. Every American is paying the price. The world is paying the price. Inflation is now costing American families, households, $175 extra every month. In other words, that is a $2,100 annual tax on every single household in the country, regardless of income, compliments of Joe Biden's horrific economic policies. The cost of eggs, meat, poultry, fish, that's up nearly 20%. On top of meat and processed meat, guess what? A predictor that steak will now become a champagne-like luxury only available to the wealthy. And the CEO of Kraft Heinz, they're warning that rising food prices are not going away. Meanwhile, look at this. The cost of cotton is up a whopping 47% to date. That is a 10-year high. Right now, we have a 30-year high in terms of inflation indicators. In other words, any clothing you buy has cotton in it or plan on buying is going to cost a lot more. The cost of raw materials also surging. The cost of motor vehicles, car parts is surging. Almost every single thing you buy is now more expensive. At the core of all of this massive inflation, rising energy costs and gas prices, all caused by Joe Biden.
So it's happening throughout the economy. It's not just washing machines and television sets, consumer electronics. It's everything, including the big things. Try to buy a house. It's now more expensive to buy a home than it has ever been at any time in American history. The median existing home price last year was $310,000. It's now over $356,000, and a lot more in the zip codes you might want to live in. Part of the reason is the cost of building materials. They're completely out of control. Last October, lumber went for about $580 per thousand board feet. As of last week, it was $712. Last August, used cars, which you might need, were selling for an average price of $21,000. This August, a year later, they were almost $28,000. Same car, $7,000 more. Over the same period, by the way, as you well know, the price of gas jumped a full $1 a gallon, and a lot more than that in some places. But in the grocery lately, the cost of a pound of steak is up by $2. A pound of bacon costs over $7 right now. And suddenly everything costs more. Eggs, milk, coffee, mustard, etc., etc., etc. These are not luxury items. This is not a trip to St. Bart's. These are things you buy every week and you have to buy. The question is, are your wages rising as fast as your costs? Well, let's see. Vegetable oil is up 60%, so probably not. And that means you're getting poorer, whether you realize it or not. But that's what inflation does. It causes poverty.
There's no defending Biden's policies or his performance. The poor man can barely locate the exit in any given room where he's speaking. And sure, I know you're all thinking, Laura, this is depressing. We're in for a rough ride. Yes, we are, for a while. But let us never give in to despair. No way. I said this the day after the election. Keep a stiff upper lip. We know how to turn things around, and in time we will. We survived Jimmy Carter. We can survive this. The Carter years led to Ronald Reagan. And if the American people are smart, and I think they are, the Biden years will lead to the new and better economic policies after 2024.
Acknowledging the severity of the crisis, Biden finally announced measures today to curb inflation, such as opening the port of LA Long Beach 24/7. Spoiler alert, it was already open 24/7, and he also barked at big retailers to speed it up.
Tonight, the LA traffic jam creating shipping gridlock across the nation. Facing a crush of cargo backed up for miles and for months, the White House meeting today with some of the country's largest shipping carriers and authorities at the ports of Los Angeles and Long Beach, announcing operations here will run 24/7 to ease the massive backlog.
Today's announcement has the potential to be a game changer. I say potential, because all of these goods won't move by themselves.
The complex delays at the nation's busiest ports, accounting for 40% of the country's container traffic, affects consumers from coast to coast. Bins filled with everyday products, from electronics to apparel, may not make it onto store shelves or front porches in time for the holidays. Products aren't just harder to get, but more expensive. Inflation at a 13-year high. Prices for beef and bacon, used cars, gas, even furniture, all up double digits. The Social Security Administration announcing its largest cost of living adjustment in nearly 40 years.
Have you ever seen a backlog like this ever? Never. We've never seen anything like this.
To help bust the bottleneck, the White House says the Longshoremen's Union has agreed to work around the clock. Walmart, FedEx, and UPS also committing to work off-peak hours, with other major national retailers to follow suit.
Everything we're seeing today was induced by the pandemic.
Correction, the pandemic is not responsible for this inflation. The Coke from the Fed is responsible for this inflation.
Right now, we're on track to handle 20 million container units in Southern California. We've never handled anything close to that.
To help ensure shelves are stocked and deliveries do arrive, freight and trucking commitments to move parcels from ports across rails and highways must also be secured, fast-tracking the tangled web of trans-Pacific and cross-country shipping, a monumental task. Tonight, the promise of progress at some of the nation's busiest ports as the country hopes officials can deliver.
And Miguel, you've been out looking at this backlog firsthand. What's the traffic look like today around the port?
Well, Lester, officials tell us there's more than 60 of these massive cargo ships out at sea. It takes a couple of days to unload each one. At that pace, we're saying the backlog won't be clear until the middle of next summer.
The problem is that this will not work. Opening the port for longer hours and barking at Walmart will not solve the problem. For example, the energy crisis will not be resolved by longer hours at the port. Americans are paying the highest prices for gasoline in over a decade, and Russian President Vladimir Putin is predicting the possibility of $100 a barrel in oil prices, which will cripple the American economy and bring it down to its knees. Even coal prices are rising significantly higher. Remember coal? They are surging higher, and matter of fact, coal is the best performing commodity for the year, suggesting that Biden's ESG policies will push the prices of traditional energy commodities higher than ever before. The rise of energy prices will strike consumers where it hurts the most this holiday season, as soaring energy prices increase shipping costs across the board. Extended hours at the LA Long Beach port will not work to resolve the port gridlocks in China, labor issues in Vietnam, Germany, or even factory closures in the rest of Asia. We have more ominous signals that inflation would not be going away anytime soon as the chip shortage gets worse. Auto supplier Aptiv issued this dire warning in the recent earnings call. Another 3 million cars won't get built in the fourth quarter, according to Aptiv. Global vehicle production in the final 3 months of the year is now expected to be about 20 million units, and not the 23 million Aptiv projected earlier in this year. Taken with the weaker than expected third quarter, about 38 million cars, 6 million fewer than prior expectations, will make it off assembly lines in the second half of 2021. That is a cut of almost 14%. Fewer cars mean lower sales for Aptiv. The company now expects to generate about $15.3 billion in sales in 2021. Prior guidance was for about $16.3 billion. Margins, revenues, profits will be shrinking across the board. This is the telltales, the beginning of an economic crash. Operating profit margins are now expected to be about 8%. Down from prior guidance of about 10%. Lower volumes hurt profits. Fewer cars get made, but a company's fixed costs stay the same. Supply chain problems such as higher shipping costs will also hurt profitability. Also, extended hours at the ports won't solve labor issues, as we continue to see labor striking multiple companies at the same time. The UAW, one of the largest labor unions in this country, is set to strike Deere. Shortages of farming supplies will endure significant pain to farmers and lead to increasing food costs to consumers. We have an organizational management crisis in America, leading workers to feel underappreciated and overworked. Fears of a never-ending pandemic and draconian vaccine mandates are not helping either. Today, we received the CPI, the Consumer Price Index, aka the CPI, due to its tendency to underestimate inflation. Before we dive into the details, here is a general theme for this inflation, reading the Wall Street Journal. The stretch of higher inflation, which many economists now expect to linger, is starting to have a broader impact on the overall cost of living, wages, and social benefit programs. The Social Security Administration said on Wednesday that higher inflation would trigger a 5.9% increase for Social Security benefits that seniors and other Americans receive, the largest increase in nearly 40 years. Time to call Grandpa and Grandma, right? Remember that gift you promised me before? It will also increase Social Security taxes for high-wage workers. Last week, the Labor Department said employees increased wages in September by 4.6% compared to a year ago, a pickup from prior months. Unusually high demand is a crucial factor, driving higher inflation. Pay attention now. Why would demand continue to surge higher and higher and higher? The answer is the trillions of dollars of dope being printed from the Fed out of thin air. This is what's stoking the demand higher. You cannot control inflation via solving supply chain issues. The supply will continue to lag the demand because the gap between demand and supply is extremely wide, and demand continues to rise higher and higher and higher via more printing from the Fed and more stimulus from the fiscal side. Spending jumped at an 11.9% pace in the second quarter. As more people received COVID-19 vaccinations, businesses reopened and trillions of dollars in federal aid coursed through the economy. Consumer spending continued to surge in August. The shortage of workers is also driving up wages, putting pressure on companies to raise prices. A sharp uptick in restaurant prices during the past few months is a sign of this pass-through from wages into higher prices, economists say. Housing costs, low inventories, and rising energy prices will keep inflation higher for longer, said James Knightley, chief international economist at ING, who now expects consumer inflation to remain above 5% through the first quarter of 2022. The Federal Reserve says our inflation target is 2%. This guy says we will be at 5% through the first quarter of 2022. He added inflation could prompt the Federal Reserve to act earlier and swifter, to alter monetary policy to head off inflation. What does that mean? It means raising interest rates abruptly. If that happens, the stock market, the real estate market, and the economy will get nuked altogether. The level of debt is through the roof. Higher interest rates will without a doubt nuke the entire economy. Prices for groceries, gasoline, and heating fuels rose in September, along with the cost of new vehicles, rent, and furniture, the Labor Department said. Prices fell for used autos, airline fares, and apparel. How lucky are we? Companies are struggling with scarce materials caused by a combination of snarled supply chains, disrupted production, and elevated demand because of the pandemic. Not because of the pandemic, because of the cocaine operation. The Fed printing money out of thin air. This is the root of the problem, not the pandemic. The combination of truck driver shortages and continued consumer demand for goods has gummed up ports, causing delays in deliveries of goods and sending shipping prices soaring. Many companies are already planning to pass on higher labor and materials costs to consumers. Surprise, surprise. In September, some 46% of small businesses said they already planned to raise prices in the next 3 months. And this is on net, according to the National Federation of Independent Businesses, a trade association, the most since monthly records began in 1986. It looks like some of these supply chain and inventory challenges are going to stick with us for a bit longer, at least through the rest of this year, said Omar Sharif, founder of Inflation Insights LLC, and a good actor too. Classic movies. An example is the shortage of semiconductors that has curbed auto production, caused prices to soar for new and used vehicles as new car sales slowed for the 5th straight month. The average price for a new vehicle in September soared nearly $4,900 from a year earlier, according to the Kelley Blue Book. However, despite private sector data signaling a rebound in used car prices, the Labor Department tracked a slight decline last month. Gee, I wonder why. Why the disparity? Perhaps the Labor Department is cooking the data to give us the illusion that inflation is indeed transitory. Rent is a key category because it makes up nearly 1/3 of the CPI index and tends to influence inflation's future path. Tenant rent jumped 0.5% in September from August, the sharpest monthly rise since 2001. This is of course bullshit. You know that rent prices are surging way beyond half a percentage point. We have reports that rents are rising by the tune of over 20%, so this is a gross underestimation of the reality. So-called owner's equivalent rent, which estimates what homeowners would pay each month to rent their own home, rose 0.4%, the most since 2006. And therefore, we call the CPI the CP lie. Instead of giving us a clear and more accurate estimate of rent inflation, they ask homeowners, how much would you pay to rent your own home? Of course, they're going to play it down. You ever heard of taxes? The CPI report also points at alarming trends of energy prices surging out of whack year over year, and even new car prices are surging to record highs at an average of $45,000. And here are the details from the CPI. I don't look at the year-over-year numbers. These are stunning, of course. I look at the month-over-month numbers because the Fed, led by criminal Jerome Powell, says prices will not go down. This is not what we mean by transitory inflation. We mean that the pace of increase will slow down at some point. So much for transitory. And therefore, I track the month-over-month numbers to see whether the pace of inflation indeed declining or increasing. Hint, it is increasing. And of course, I notice any increases or decreases exceeding 2%. And here are the notable changes of price month over month. The prices of meat, poultry, fish, and eggs are up 1.7% month over month. Mind you, they're up 10.5% year over year. The prices of fuel oil, for example, are up 3.9% month over month, and they are already up 42.5% year over year. The prices of gas services, if you have gas to heat up your home or whatever, these prices are up 2.5% month over month, and they're already up 2.5% year over year. But rest assured, used cars and trucks prices went down 3.7% month over month. The problem is, prices are still higher by 24.5% year over year. Airline fares also went down 6.5% year over year. So the good news is, you can fly for cheap, if you don't mind the hassles and the disgusting environment of flying these days. And here are some more details in the CPI. For certain food items, for example, white bread is up 2.5% month over month. We have fresh biscuits, rolls, and muffins up 4.6% month over month. No more biscuits and muffins for you. Your waistline could use that, right? What about frozen and refrigerated bakery products, pies, tarts, turnovers? These are also up 2.5% month over month, and 7% year over year. So if you wanted to cheat and buy frozen muffins and rolls instead, you're not going to find any relief here. When it comes to meats, prices are up 2.3% month over month. For beef and veal, prices are up 3.3% month over month. For uncooked beef roasts, that is up 6% month over month. Mind you, up about 21% year over year. Likewise, for uncooked beef and steak, prices are up 3.2% month over month and up over 22% year over year. Uncooked other beef and veal also up 5.2% month over month. Perhaps we can find some relief in pork. Nope. Bacon, breakfast sausage, and related products are up 1.9% month over month and over 14.5% year over year. The prices of ham up 3% month over month and up over 7% year over year. Likewise, the prices of frankfurters, remember last time around we covered the CPI, prices were down. And I said, Jerome Antoinette says, let them eat frankfurters. Well, even this one is rising higher in price by the tune of 2.6% month over month. The good news is the category of other uncooked poultry, including turkey, are up 2.4% month over month. You better buy your turkey now, because as we get closer to the holidays season, this one will start to pick up in price. What about frozen fish and seafood, up over 2% month over month? What about eggs prices, up over 3.3% month over month? What about the category of other fresh fruits? It is up 3% month over month and up 6% year over year. Notice that apples are down slightly month over month. However, prices of apples are up almost 8% year over year. Likewise, the prices of lettuce up 2.2% month over month and up 5% year over year. I don't see broccoli here, but I hope that broccoli prices went higher by 100% month over month, so finally I could have a legitimate excuse of not eating them. What about butter? Here's the good news. Butter prices are down 2% month over month. So here it is, folks. Let them eat butter. If you're complaining about inflation, prices are soaring out of control. What's going on? Eat butter if you don't like it. And you better get it now, because all of these cows being killed, prices of butter will rise higher. What about other fats and oils, including peanut butter? Prices are up over 3% month over month. What about simple things like salt and pepper? They're up 2% month over month. We're not going to have any flavor in our food, in our butter, unsalted of course. What about baby food? Up 2.2% month over month. Prepared salad prices are up over 3.6% month over month. The good news, here comes the good news. Food at employee sites and schools down 6.4% month over month, and food at elementary and secondary schools down 10.4% month over month. So if you are hungry, don't complain about the Fed or about Biden or any of that. Buck it up and go rob the cafeteria of an elementary or a secondary school. The problem is, the reason for the decline is the fact that the cafeteria is closed and it's out of food. And therefore, we call this the CP lie, because these numbers hide the true nature of inflation in the economy. More details in the energy category. We have fuel oil up 3.9% month over month. We have propane, kerosene, and firewood up over 4.9% month over month. And then we have miscellaneous items. For example, window coverings. These prices are down 3.4% month over month. So get yourself some window coverings while you rob an elementary school looking for food, and then you can take a plane to escape. That's the plan. They're all cheap for now. Don't forget about the butter, of course. What about the category of other liners? Prices are up 8% month over month. Stunning. The category of furniture and bedding is up 2.4% month over month, and specifically living room, kitchen, and dining room furniture up 3.5% month over month. Likewise, for appliances, the category of other appliances is up 2.2%. Microwaves, those prices are rising higher. What about dishes and underwear? Dishes and flatware. Those prices are up 2.9% month over month. Continuing with the CPI, what about apparel? Remember men's suits when they were down big, but they're not down anymore? You missed your chance. Likewise, men's shirts and sweaters up 4.3% month over month. Boys apparel up 3.7% month over month. And the picture gets even worse for female apparel. Women's apparel up 2% month over month. Women's outwear up over 8.4% month over month. And remember this? Women's dresses. When I told you a few months ago, go get your wife or your girlfriend a dress while they're still cheap. They're not cheap anymore. Prices surged higher by about 6.7% month over month. And now the prices of women's dresses are up 9.5% year over year. When it comes to other categories, the likes of boys and girls footwear, those are up 3.7% month over month. When it comes to toddlers apparel, that's also up 3.2%. But here's the good news. Watches are down 2.3% month over month. So if you're complaining about food prices rising higher, let them eat Rolexes. We already talked about used cars and trucks down 3.7% month over month, but prices are higher by 24.4% year over year. Here is some more good news. For sewing machines, prices are down 2.9% month over month, and they are down 10.3% year over year. Get your sewing machines now before they get more expensive. This is the beauty of watching this show. I give you tips in shopping. What about computer software? Prices are down 3.5% month over month. And when it comes to lodging away from home, prices are down 2.3%. And when it comes to motel prices, they're down 2.6% month over month. So after you rob the elementary school cafeteria and you load up on butter and Rolexes, you can fly away with cheap airfare tickets, or you can stay at a motel after you commit the robbery, because those prices are down month over month. I don't just give you shopping tips, I give you crime tips too. What about the prices of domestic services, whatever that is? Prices are down 2.3% month over month. The prices of motor vehicle maintenance and repair down 9.3% month over month, but mind you, prices are up 43% year over year. Likewise, the prices of public transportation are down 4.6% month over month. We already talked about airlines, but the prices of other inner-city transportation also down 2.1%. The prices of ship fare down 2.4%, but mind you, still up 10.8% year over year. The prices of inner-city transportation are down 1.9% month over month. This is all garbage, of course. You and I know that nobody uses this crap anymore. We use Lyft and Uber, and those prices are surging out of whack. Thus, the CP lie. What about the prices of video discs and other media in case you're old school? These prices are down 2.2% month over month, and they're also down about 10% year over year. So stock up in old school DVDs and video discs before they get even more expensive. They're down for now. Who knows if they're going to be down for any longer? What about the prices of delivery services? They're down 1.9%. This is not going to last, of course. This is month over month. What about the prices of legal services in case you want to sue Jerome Powell at the Fed or Joe Biden at the White House? Those prices are up 1.8% month over month. And of course, the good news is that the prices of alcoholic beverages did not go higher by much. Likewise, funeral services, these prices did not go higher month over month. Therefore, if you have alternative plans, you're good. And of course, the Fed announced in their FOMC minutes today that they will start tapering some cocaine out of the financial system after flooding it with over $120 billion worth of coke every single month. They're cutting about $15 billion a month in assets purchases. Why is the Fed not eliminating their mortgage-backed securities purchases in full right away? Isn't the housing market in a massive bubble, pricing the majority of Americans out of the market? What is the wisdom of continuing to inflate the real estate market at this point? Perhaps to allow our deal leaders and the oligarchs' overlords to dump their properties while the market is still hot. Many Fed officials actually disagree with the official stance of the Fed, saying that inflation is surging beyond expectations and a more aggressive tapering approach is merited. More participants saw inflation risks as weighted to the upside because of concerns that supply disruptions and labor shortages might last longer, might have a larger or more persistent effect on prices and wages than they currently assumed. Surprise, surprise. We've been telling you this since the beginning of the year. Nobody listened, and now we have a massive economic crisis. The truth is, cutting $15 billion a month in assets purchasing will not do the job. Inflation will continue to spiral out of control, so long as the Fed remains accommodative to Wall Street by recklessly printing money and racking up debt with the sole purpose of making the rich richer via inflating the equities and real estate markets. This is a major policy error that will force the Fed's hand to raise interest rates abruptly on an already wounded economy to curb inflation. This will unleash an epic economic and market crash, the likes that we have never seen before, and it will leave the country in a deep recession, with the poor and middle class destroyed, while the rich, who already cashed in from over a decade of reckless, irresponsible Fed policy that favored them, they get to enjoy buying assets once again at dirt cheap prices. This is a classic American story. Folks, this is all I got for you for now. Thank you for listening, thank you for watching, and good night.